Hello guys, I welcome you all to our first webinar. Before we get onto the charts, I just want to say thank you all for being here and choosing us to educate you rather than sell you signals. Our main focus is to help you guys become better traders. We'll strive to make you better and allow you to see the market different to how the 90% who lose money see it. It's good to have a room where people don't have to pay a monthly fee to be with you. They have a lifetime free access. That means the very good traders we have and the very experienced traders we're going to have will stick around to help the rest of the traders. And that is what is going to happen in our group. The results will be that we will have our very experienced traders, people with banking experience, coming forward and saying, okay guys, this is a good strategy to work with and we're all going to test it. Now, if people out there are charging monthly fees, all they're thinking about and all they're doing is here at Simply Forex, we think about growing our traders and develop them to become better. We don't work for monthly fees. We will develop our traders in our group. If you're paying a monthly fee, stop paying that monthly fee. When the webinar is over, go over and unsubscribe. You will never learn anything there. You will never learn anything if you are subscribing for monthly fees. Believe me, you will not learn anything. I've been in them rooms like myself, and I used to pay $70 a month. And by the time my first month was over, my account would be blown. Yeah, and I didn't get a chance to even pay my to even reach the second month. I'm not saying I would have paid my second monthly fee. In groups, like I mentioned. If you're new to trading, you can go on the internet and find a lot of free information. But I have gathered a PowerPoint and just briefly describe the main stuff you need to know. But you can learn all the million sources on the internet and still won't know what you're talking about and still won't know what you're doing on the charts. You may have the understanding and knowledge but you may not have the ability to trade. Well, we will help you with all of that, whether it's the understanding, the lack of knowledge, or the ability to trade. That's what we're here for. And you're here to learn, not just to make money at the start, but to learn. The main focus is for you guys to learn so that you're able to take your own trade later on in the future. Now, so the things I mentioned, which you shouldn't pay for, try and stay away from that. Now, you paid for this course, which is the right choice. You've paid so less to become a pro trader. Now again, our aim is to help people. And it's not about the money. If it was about the money, we charge monthly fees. We charge even over $500. And believe me, there are people out there charging that much money, and all they teach is basic support and resistance. And most of the time, they're wrong. We as a team are going to make every step forward, and every time we make mistakes, we're going to correct them and move along. We'll become better traders that way. We're going to stick as a team. We're going to do this as a team. So now let's move on to the charts, guys. First, here we have dollar index. As you can see, previously since May, the dollar index has made this new resistance. We can see this touch here. It's a perfect touch. Now, since then, prices came all the way back, touched it again in November 2016. Now, moving forward, currently, right now, dollar index has broke out, came back to retest. Now, this has become the new support. From here, prices went up. Now, it's come back down again. Now, at this point, what we're going to see is this support. It's the current support right now, and we're looking, if this breaks down, and we'll wait for some sort of correction for dollar index before going down more. Currently, it's looking full on bearish, as you can see all these candles. is all suggest this trade, this dollar index is currently going all the way down. But however, if we see the daily candle close above this resistance, and we'll need a break of this trend, downtrend, in order to go long. Now, moving on to our first trade, first currency pair. We have USD JPY. Moving on to 1 hour chart. Okay, this is USD JPY 1 hour chart. You can see prices are in a downtrend. I've marked it here with some trend lines. Now you can see a lot of people would think this is the trend right here, and they will think this is the, you can see it touched, perfect touch here, another perfect touch here, and here it broke out. As you can see, it broke out. Majority of the people would go long after this retest. You can see it retested and start going up again. Majority of the people would enter long at this point, and if you can see what happened after that, prices did go up, however it dropped back down. That's because the trend line is drawn wrong. You can see, I'm just going to explain, I'm just going to show how it should have been drawn. Now this trend is drawn based on the line chart. If you can see, look, touch this level, multiple touches, touch here, here, and here. So this is where a lot of traders went wrong, thinking this is the breakout, this is the retest, and then carried on moving up. That's wrong. Now personally, I've traded this right here. So it was right at the bottom of the trend. I knew this trend was being respected multiple times. You can see here, here on the previous structure. Now if we look here, this, I'm just gonna get rid of this, show you how you should draw this. Now we have a full-on naked chart. Okay, so the main webinar I've done, after it was finished, I figured out it wasn't recorded, so I'm doing all this again just for you guys. Now here's the trend. That's the top trend. Okay, now here it is. Now a lot of people say, oh, the trend has to be touched perfectly to the wicks, it has to be drawn perfectly to the wicks. That's wrong. It doesn't have to be perfectly drawn. However, you can't have stuff like this and, you know, all this out and saying this is being respected. That would be wrong. However, this is okay. You can see it's touched it multiple times. Yeah, it did break out here. However, if you look, the wick, the body of the candle closed above the trend line, which is still accurate. So this is where I entered. This is where I entered. And if we look on 4 hour chart, this candle was my entry because I found a nice entry on the 1 hour chart. However, prices did go back down, retested this trend, and it started going up. So my mistake was, again, I did go back on this trade, figured out what my mistake was. Even though I hit my take profit, this was my risk reward ratio. So I entered here. My stop loss was around about here, and my take profit was here based on this previous high. Now, if this candle was my entry, it did go back down and it retested this trend, and after this was bullish engulfing. This candle should have been my entry. If you can look here, that should have been my entry, and my take profit stop loss would be exactly the same. Now I risked 60 pips, 67 pips for 180 pips, which is perfect. That's about 1 to 3 risk reward ratio, and most of the professional traders out there, that's their ratio. Now if you look here, I'm just going to get a horizontal line, sorry, and let me just get rid of this. This is what price action is all about. Price action, you can see this is the support right now. Okay, went up, came back down, touched it again, went up again, and it broke it. Now currently, the moment it breaks resistance or support, it becomes the opposite. So this was the current support, did break, came all the way back down, touched the downtrend, went up, touched the resistance, previous support, came all the way back down, touched it again. This was my entry, got 180 pips from, went all the way back, touched the resistance again, came back down, retested it. So all these entries, because it gives you the possibility of enter different trades. Now you don't have to do overtrade. This is not overtrading. This is just simply sticking to one trade, one currency pair. And I advise you guys to stick to less currency pairs, major currency pairs, rather than just keep looking at different currencies like and then do 10 minutes of analysis and straight bang, take the position. That's wrong. Now, if you look at this currency, if you keep looking at this every time, every day, analyzing, keep looking at finding different position, you'll find it much helpful. Now, if I draw this trend line here, go back to 1 hour chart. Okay, on 1 hour chart, what we see, there's the previous support, the previous resistance. Resistance, this is resistance. Came back down, touched this uptrend, all the way back up, touched the resistance again. Now you can see it came back down, broke this uptrend. So this would be the entry based on many levels. You can see all the EMAs are crossing over. Now this trade would have given us, if entered, this would be our entry right here. Stop loss just above the last high. Take profit would be round about here. Now that would have given us around 1 to 4 risk reward ratio, and we would have been risking 62 pips for 222 pips. Now this is what we're going to do. This is what we're going to do. We're going to do short terms. We're going to do swings, because I personally, day trading, it's a bit biased, because day trading is only for those day trading is for those who are looking to get a small amount of pips, between 30 pips to sometimes 50 pips. However, swings is less stressful. There's more reward to it. Okay, we're looking to get 222 pips if this was entered. However, right now, you can see this is another support here. This is the support. Went all the way back up, came back down, support, broke the support, all the way back to the trend, bottom down channel. Now prices right now, it broke out, retested it, now it's going back down. Now what we're gonna do is, this is gonna go all the way down here. However, since we're not in it, I'm just giving out what the kind of setups we're going to give you guys, like the analysis and stuff like that. And this is just to help you guys how to analyze it, what to look for in the market. Now, so this is going to go all the way back down to 12,600. Now moving on to our second currency, which is GBP AUD. Daily. Here we have GBP USD. Some of you guys will asking me how to use a fib, what is Fibonacci retracement, how to use it. So I'm going to teach you that now. Here we have Fibonacci retracement. Now how you want to set this up is, you look for the higher high, which is here, and then you look for the lower low, which is here. Now what you want to look for, you can see prices were in a downtrend. This is the down impulse, came back all the way down here, to touch this support, went all the way back up. A test of went all the way back to the 0.50 fib level. From here, normally it's 0.50, 6.18 fib, and 78.6 fib level are the most important levels in Fibonacci retracement. We saw this breakout, came all the way to the 50 level, broke it, strong break. You can see that a lot of sellers came in here. So this would be your entry if you're going to enter, and the risk reward ratio would look like this. So if this is your entry right here, stop loss would become above the higher high and take profit lower low. You can see went all the way more than that, way more than that. But that doesn't mean you wouldn't know what's going to happen. You wouldn't know if that was there. You wouldn't know this big ball was gonna come. So you take profit would be hit. And that's it. You're out of this trade. Now what you shouldn't do is you should never chase a trade. What I mean by that is, say if this trade is going up, so you're initially looking for this trade, for instance, okay, this is where the market is, for example. Now you're waiting for this trade to hit the 0.50 fib level or 0.60, whatever. But what you shouldn't do, you would probably think to yourself, okay, prices are going up, so you can see it's all the way here. Here I might enter here. Now in this scenario, you'd probably get some profits out of it, but that will become a habit, and you'll keep doing it, and it will be bad for you in the future. Now what we're looking for this trade right now, okay, I'm just going to show you another example. Here's the higher high. You draw the fib from the higher high all the way to the lower low. Just set that up for you. Okay, here 0.618 bang, there, touched it multiple times. So touched here, this would, let me just get this. At this point, this is where you should think about entering. Now let's get a risk reward ratio. You can see after this inverted hammer, so after that you're going to enter on this candle, for instance, okay, after 6.18 fib. Stop loss would be above the higher high. Take profit right here. Now you can see what happened. Did not touch your take profit. However, this is daily time frame. So these are like major swings. We're going to do like mini swings. This would have taken us around 41 days, which I don't think anyone's disciplined to hold this. However, we're going to be giving mini swings. So right now for this pair, we're looking, let me just get rid of this all. Now draw a fib, higher high, this is a lower low. Now we're looking for prices to come to this level, the previous resistance, support, break, went all the way back, came all the way back down, broke again. Now we're looking for prices to come to this level. Look, it's following this trend really nicely. We can end. We go on to the 4-hour chart and smaller time frames. Now you can see this is touched it here. Now it's going. This is gonna go up here somewhere to previous high right here, and it's gonna go back down right here. So whenever we get a touch on this trend, we could look. Now if that happens, sorry guys, just give me a second. Now if that happens, if prices come back here, come to this, if we get a touch on this trend, uptrend, we're going to go along. Now moving on to our next currency, okay. It's Euro AUD. Let's go to daily time frame. It's important to start on a bigger time frame before going to do swings, because you get the overall bigger picture. Now here we have a Euro AUD. You can see this is a strong support since October, since mid October 2016. Prices have been consolidating in this level zone. Now we can see prices did break. Most people would think this is a clear breakout and this is a retest. However, if we look on a daily, if we look on a weekly chart, all that is just left a big wick right here. So this is still deciding which way it's going to go. Now going back to the daily chart. In order to go long for us, we will need to wait for this level to break. That breaks, if this level breaks, if prices break this, we will look for some sort of correction to go long. Now, if we do go long, let's get a risk reward ratio. Okay, this would be our entry. We would wait for prices to come back down to retest this. Okay, this would be an entry somewhere here. Our stop loss will be below that, around about here, and take profit here, which is the previous high. Now, this trade would give us around about 250 pips, and we'll be risking around 100 pips. That's 1 to 2 risk reward ratio. Now moving on. Now, if you can see, these 50, 20 EMAs are crossed over. Now that's suggesting it's a sell. However, we will wait for this level to go break. If it doesn't break, this is gonna go down and it's gonna break this support. Now moving on to our last trade, which is Aussie USD. Let me just sort this out here. Aussie USD, you can see prices did make a double top here. Now, I was watching this trade from last Friday, and prices were around about here. And you can see it did make a cup and handle pattern. It's forming the cup and handle pattern. Now, you can see this is a perfect cup and handle pattern. There's the handle, there's the cup. You can see the break of the handle. Now you would enter this trade, moving on to the 1 hour chart, which is that's the time frame which you should look for entries if you're going to do swings. You wouldn't enter based on a 1 day chart or a 4 hour chart. So on the 1 hour chart, here we can see the breakout of this handle. That would be your entry right here, right on this candle. After this close, that would be your entry, stop loss below this, round about here, take profit all the way here. Now let me show you, let me tell you why. Moving on to the daily chart. Moving on to the daily chart, this is going to go a lot more. However, it's going to be a long swing, so you're looking to get around 100 pips to 150 pips. It's already moved around about. It's already moved 100 pips, so we're looking to get around 150 pips from this. Now, if we were in this trade, I'm just showing you this, where you would enter, why you would enter, based stuff like that. Now, currently, I'm looking at this trade for a buy opportunity. So we're looking for prices to come back to this trend, touch on this trend, and if we find any confirmation for a buy opportunity, I'm going to give you guys the setup technical analysis on the Telegram channel, and that's it. And thank you guys. Okay, this webinar, this recording is done after the webinar. I've done the webinar, I was recording, well, I thought I was recording, the webinar ended. This is for those who missed it. The webinar did end. However, I figured out I wasn't recording. So I had to do so I'm doing all this again, and this time I'm just recording it. There's no webinar right now because I've already given that for the students who are already there. And this is for those to reflect back. Now, this is just to go back, reflect on what you should look for, and what kind of confirmation you should look for, whether it's EMAs, fib levels, bullish engulfing, whatever. This is just to show you guys when analyzing, this is what you should be looking for. Now I'm going to look for some currency pairs to be looking for this week, and hopefully we're going to find some good setups. I want to thank you guys again for being here, and we're looking to expand you in much more knowledge. Thank you.